non-block declaration. 50 house with vanilla wafers. It's the remedy to separation. Tupac of my generation. Blue pill in the fucking matrix.
Hey, peace.
What's up, Ash Cat?
What's going on, brother? What's going on, man? Yo, my apologies for yesterday, man. When I tell you, I might have looked at the clock like 7:30. I was like, all right, I got a half an hour, and then by the time I looked back up, it was like 8:56. I said, oh, you know what I mean? So my bad, brother.
Man, yeah, it's all good, man. My people
like, where ride, man, not the heart. You know what I'm saying?
Yeah, my people's like, man, where are you at? I got all these questions. I want to say, man, I don't know, man.
Yeah. Should I turn my joint sideways or? No.
Yeah, right there.
All right.
Yeah.
Because my joint got the little black joints on the side, so I didn't.
Yeah, I'm using my stabilizer.
Oh, got you. All right.
Yeah. So I went to the I know I seen you in the gym yesterday.
Yeah. I was trying to get it. I mean, you know, I still got it. You know what I'm saying? Like, ball is life, man. You know what I'm saying? So I still got it. I can still get some buckets, you know.
So you had me out there. I went out there this morning.
Okay, back.
I did my normal shoot around. I said, okay, Dad, you know, I got to get back. I've been gone for like 2 weeks out the gym. So I said, you know what, I got to get back in there this morning.
Yeah, for sure.
Yeah.
For sure.
So, man, I want to welcome Ash Cash to the Tires Longino Show, man. We're right here live on IG. We're going to be talking about Hustlenomics. We're going to be talking about his other book. We're going to talk about finding if you got questions. There's a question icon down at the bottom of the screen. Yep. Click that. Type your question in. If you do not see your question come across the screen, go in the comments and ask the question as we go through this interview, and we'll get those questions to Ash Cash so we can give you the best answer possible. I know you do this on Mondays with Big Tigger and giving out a lot of information. So hopefully now the people today, let's educate them, let's entertain them.
For sure.
And let's get to it. So right off the bat, man, let's get straight to it. Going in 2020, with it being election year, with it being, you know, when people, so many people now are really becoming credit conscious.
Yeah.
Okay. They want to fix their life. They're tired of living paycheck to paycheck.
Yeah.
Okay. They want something better. They want to get the good interest rate. They want to get, you know, for a house and for a mortgage loan. So let's talk about budgeting 2020. Going into the new year, what should people be focusing on how to budget properly in the new going into 2020?
Yeah, I think number one is change your mindset around money. Because I can tell you about how to budget. I can tell you make more money. I can tell you all that. But if your mind ain't right, it's not gonna matter. The same habits that somebody has at $30,000, they're gonna have at $100,000. They're gonna have at $1 million. There's no coincidence that 70% of people in America live paycheck to paycheck, and 17% of those people make over $100,000. So it's not the money, right? It's the mindset. And so I would tell anybody, change your mindset as it relates to money. So a couple of things, what I mean by change your mindset. Number one, change your relationship with money. We were taught, especially in the Black and brown community, we were taught that we should be working hard for money, and money should be working hard for you. And so stop staying in that mindset that you have to exchange time for money. You might have to do that in the beginning, right? In the beginning, if you didn't come up with anything, if you weren't born into a family that you had money, you're gonna have to work for money in the beginning. But stop using your money to buy things. Instead, try to figure out how you can use that money to make more money for you. Whether it's investing in real estate, whether it's using that money to create intellectual property, whether it's investing in stocks, bonds, your 401k, your Roth IRA, whatever it is, take that money and invest it in something, in a business, whatever it is, invest it so that money now starts working for you. So that's number one. Number two, how do you get there, right? How do you get to the point where you're saving and get into a place where you can use your money to work for you? You have to pay yourself first. Too many times we get into debt. We think about our bills. We think about everything else except ourselves, where when we look up, there's no more money left over to save, to invest, to break the cycle. And so I would say that the number two thing, or number one, is to pay yourself first. As you pay yourself first, you have this money now to start investing in things that's going to create residual income for you. And then that's the number one thing you need to do. Once you do that, then you'll start to notice everything else starts to fall into place. Your budget will fall into place. Like everything else will fall into place, because at the end of the day, now you have money working for you. but then you still have your physical labor. And so now you can, recycle the process, right? You can say, all right, now I got this. I'm going to go over here. I'm going to work again, make some money, invest it. Now I got residual income number 2. Then you keep doing that cycle, right? They say the average millionaire has 7 sources of income. And so the goal is to just keep repeating that cycle until you're financially free and you never have to work for money.
And let's be clear, you're not just speaking on people who want to go in business. You're speaking of everyday working class as well.
Oh, absolutely. And that's the thing. Like entrepreneurship is not for everybody. And I know social media has made it look sexy. Like I know social media makes it feel like anybody could do it. But it takes a certain, you gotta have the stomach for it, right? Like you can't, like entrepreneurship is a hustle, you know what I'm saying? So you gotta have the stomach for it. And so if you don't have the stomach for entrepreneurship, because and the reason too is because it's so unpredictable, right? Even if you have a good flow, entrepreneurship is unpredictable, and so you always have to be, ready, to be able to pivot. Some people need that stability. And so, this advice is for everybody, whether you're an entrepreneur or you work corporate America. You have to do that, right? Because especially for somebody, let's say, who does work corporate America, where that job is their only source of income, right? If that job is your only source of income and you're not financially free because you don't actually control it, right? Somebody else controls your destiny. And so you got to get to the point where even if you work a 9 to 5, especially if you work a 9 to 5, you need multiple streams of income. You need to, scale back on your lifestyle. You should not, if you make $50,000 a year, your lifestyle shouldn't cost $50,000 a year. Your lifestyle should cost $30,000 a year, and that extra 20 should go into investing, right? If you make $100,000, your lifestyle should cost $70,000 to $80,000, and the rest of that money should be used to invest in order for you to create other streams of income. That's the goal. The point is too, because a lot of times I hear people talk about budgets, and the reason why people fear budgets is because they're like, yo, I'm working hard and I want to enjoy the fruits of my labor. And I'm that way as well. I want to enjoy the fruits of my labor as well. But I want to enjoy the fruits of my labor, but I don't want to have to keep working for it, right? I don't want to enjoy it once and then have to get rid of it because I can't afford it no more. And so what the point is that if you're going to buy things with the money that's coming in from your passive income, opposed to buying things with your residual income. I mean,
okay, real quick, I'm gonna ask you this question. Then I'm gonna go because we got a question in the box here. So explain to people who may not know what passive income is, and also if you are working a 9 to 5, because most people are. A very small percentage of people who are entrepreneurs and self-employed. Everybody else, they get paid either every week or bi-weekly. So how do you pay yourself? And then explain to people what passive income is.
Yeah, passive income, like Neighborhood Nip calls it, mailbox money, right? It's money that you don't physically have to work for. So if you are a landlord, right? Let's say you buy a house and you're a landlord, and every month your tenant gives you a check to live there, then that's passive income because you physically did not have to do anything in order to get that check. I'm an author. I've written 8 books, right? 4 of them have been bestsellers. Every single month, I get a check from Amazon for royalties based on the book, right? Like my first book came out in 2009. That's almost 10 years ago. And every month, I still get checks from a book that I wrote 10 years ago, right? It's passive. I wrote the book one time, and I still get paid from it. So passive just means something you're not actively doing, right?
Right.
So the opposite of passive is active. Like active means you're like actively involved. Passive means that it's just happening in the background. So it's mailbox money. It's money that you probably have to do the work one time, but then once you do the work, it comes to you. As far as how do you save?
Pay yourself first.
Automatic.
Because a lot of people, pay yourself first.
I think that's how it happens. It has to be automatic. It has to get to a space where you don't have to think about it, right? And so, like when you work in your 9 to 5, income tax, FICO, all that stuff, that comes out automatically. You never see that money. That money comes from your payroll. It comes out,
right?
Right?
Right.
So you got to treat yourself like the IRS. You got to treat yourself that same way. And so instead of seeing the money, go to your HR person, go to your, your payroll person and say, listen, here's this bank account. I want you to take 10% of my check every time I get paid and deposit it into this bank account. I don't want to see it. Make sure that that bank account is not attached to your checking account. Make sure you don't have a debit card for it. Make sure that it's inconvenient for you to make sure that it's inconvenient for you to get to it. And then once you do that, then you know what I'm saying. That's how you start to save.
All right, let's go to a question real quick. Let me see if I can get okay. The question is, what are low risk investments you recommend?
I mean that's a loaded question because there's a direct correlation between risk and reward. And so when the word investment, all right, so like a low risk would be like a CD, would be treasury, would be anything that's paying a low interest rate, frankly. But also there are other things that in the market might seem like high risk, but to me, because of my appetite, it may not be high risk to me, right? It may be low risk. For instance, I'm a big fan of real estate, right? And so, I look at real estate, no matter what happens to the market, people always need a place to live. And so I'll always have a market to be able to, sell, to rent out a property. And so for me, that's low risk. And so, the notion of high risk and low risk is relative to the person, right? It's relative to the person. It's relative to where you are, which financially. For somebody who is living paycheck to paycheck and doesn't have any money saved, if you invest $100, that's high risk to me, right? Because at the end of the day, any investment has the opportunity of losing, and if you're living paycheck to paycheck and you don't have any savings, you can't risk to
a whole lot
to lose. You know what I'm saying? To lose that $100. So to me, that's high risk. And so I would say to anybody who's looking to start investing, I'm someone that says you should be investing. You should start passively and then go actively. So I'm a fan of apps like Acorns that allow you to attach your debit card to your to your Acorns account. Every time that you are able to use your card, it rounds up your
it takes your change and rounds
dollar
it up.
and it invests the rest. I would say start there, and then as you get the knowledge of learning your risk tolerance, then you start to look at different options based on your age. Like it differs based on a lot of variables.
All right, let's go to another question here. What financial or credit principles should you teach your kids at an early age?
Yeah, I think number one is what I said early too, is don't teach your kids to work for money, right? Teach your kids that money should work for them. I wrote a book with my daughter when she was 3 years old. Anytime she asks, like basic stuff she get, but anytime she asks for anything that's expensive, that's a lot, I go right to the garage and say, yo, here's some books. You know what I'm saying? Because she has to understand that, don't, you have this residual income, you have this product. So you should be learning how to sell your own product. So number one, don't teach them to work for money, teach them that money should work for them. But then number two, also teach them about entrepreneurship, right? Teach them these habits of actually going out and earning money, right? Because the danger of passive income is because you're not working for it, it's easy for people to splurge it. It's easy for it to just come and you're like, oh, I can do anything I want. And so for a kid who hasn't been able to see like the grind and the grit, I think it's important for them to see that no matter how much money you have. Like you could be a multi-millionaire, your kids need to know how to grind, right? Mm-hmm. And that's important because if you look at the studies, they show that most generational wealth is gone by the third generation, right? Because what happens is the first generation grind for it. The kids saw the first generation grind for it, and they, now they're entitled. They go to the good schools. They got the good positions, but they never teach their kids how to grind.
Right.
Their kids just feel entitled to it, and now they got this money. They blowing it. So by generation 4, you back to that beginning cycle. So those are the two things I would say. Teach them not to work for money, but that money works for them, but then also, teach them how to grind.
Credit repair. I know that's been an industry that has been booming as of late, right? Everybody's doing credit repair. Everybody's offering this service to people along to piggyback off what you were saying as far as making money work for yourself, whether you are self-employed or not. How does credit play a part in that? And tell people how to leverage their credit, because a lot of people think just because they pay their bills on time, but it's more to credit than just paying your bills on time.
For sure. Yes, I think so. A couple of things. I think number one, credit can be like, so I see a lot of people with this debt-free movement, which I like, but it's skewed advice, right? Being debt-free is good if you have bad debt, right? If you have like credit card debt, if you got debt that's expensive, but you can leverage credit to build wealth, right? So think about your mortgage, think about a business loan, think about things that can help you continue, right? Like as an entrepreneur, and this is I'll give you a prime example as an entrepreneur, how credit can save you, save your life, save your business. When you start to really do business, whether it's with government, other vendors, there's something called net 30, net 60, net 90, right? Mm-hmm. What that means is I do the work, and I don't get paid until, if it's net 30, I don't get paid till 30 days after I do the work, right? If it's net 60, I don't get paid till 60 days after I do the work. If it's net 90, I don't get paid till 90 days after I do the work, right? And so let's say, for instance, you're grinding it out, right? You're doing the work. And for whatever reasons, you don't get that money, and you need access to credit to do another project or whatever the case may be. And so at that point, credit is necessary because it can help your business afloat. It's not that you don't have the money. It's just that for right now, the way your payments are set up, you're not going to have money to do it. So that's number one. Number two, right, you think about home ownership. Without good credit, without, being able to get a good interest rate on your, on credit, you could get a house, but then you'll probably be paying more money for that house, right? People don't realize even that insurance companies also use your credit to determine your rate. And so credit works on so many different levels. What I would say with anybody, if they're wanting to get into credit repair, meaning like they're hiring somebody to do credit repair for them, you don't really need anybody to repair your credit. You can repair your credit yourself if you understand 35, 30, 15, 10, 10, 35% of your scores, your payment history, 30% of your scores, your usage ratio, 15% of your scores, your length of credit history, 10% of your scores, your credit mix, and the other 10% is any new credit that you have. As long as you pay your bills on time, you don't have any collection items, you have your usage ratio, you're using less than 30% of your credit. In fact, those who have so your credit score go from 300 to 850. Those who have a 720 or above are considered excellent credit, and those people usually have 10 to 15% of usage. As long as you know that, you're fine. What credit repair is good for is for those who have a lot of derogatory information, collection items, and they're too busy to do it themselves, right? Because you can send out letters, and it becomes tedious. If you're too busy to do it yourself, then you hire a credit repair person. But at the end of the day, whether you hire somebody or do it yourself, understand how credit works. Know the ledge, right? Knowledge, know the ledge. Because if you don't have the knowledge, then even if your credit goes to 850, it'll go right back down to 500 if you don't, do the right things to maintain it. Right,
because what people don't understand too, your credit can go up, even though they report every 30 days. Within that 30 days, your credit score could go up or down for the littlest things.
Yep.
So you got to check your credit. I check my credit every day.
Yep.
First thing I wake up, hey, what's going on?
Right.
You don't wait. I don't wait on Credit Karma or other services.
Right.
We check it every day. So I know you gave some of the keys to how to work that out, but what are the basic steps somebody who's just starting out really wanting to repair their credit? What are the basic steps they can do on their own without paying the money to hire somebody else? What are the basic steps they can do? I know they can send out the letters, but you got to know how to send those letters out.
No, for sure.
So what's the basic steps they can do?
Yeah, so I think so number one, I think it's important to always make sure, like you said, you check your credit. Make sure you're checking your credit to make sure that whatever information is on your credit is accurate. That there's no mistakes on the credit, because those letters can be removed if there's inaccurate items on your credit, right? So anything inaccurate, and that means if name is spelled wrong, your address is wrong, date of birth, whatever it is. any errors need to be removed, right? The item needs to be removed. So number one, I would say, pay attention to your credit to make sure that there isn't any errors on there. Number two, it's important that debt is validated, right? And what does that mean? So, let's say I take out a credit card with Macy's, and then, I don't pay them back, and then 180 days they can only keep it on their books for 180 days, and then they write it off. Once they write it off, they'll try to get some of that money, so they'll sell it to a collection agency. Collection agency is going to try to get the money from you, or whatever the case may be. But there's something called debt scavengers, and you can look that up. You can Google it and see debt scavengers.
Scavengers, okay.
And what a debt scavenger does is they look for old debt, and try to claim the debt as if they own it, just to get free money. And because people don't know, somebody might get called, 8 years later and say, yo, you owe Verizon, $400. And, they put it on their credit report. They're like, oh my God, I do owe Verizon, and they want to pay that $400, but don't realize that debt is obsolete because it's 8 years old. It shouldn't even be on there. And so anything that's on your report, that's negative, I would say that you should challenge it. You should ask them to validate the debt, to verify that you are, the onus is on them to prove that they're the ones that you owe it. The responsibility isn't on you; it's on them.
Right.
And so challenge them to
because
do that.
because they also have 30 when you're disputing, things that's on your credit report.
Yep.
The companies have 30 days. A lot of people don't know that they have 30 days to reply, and if they don't, it has to automatically fall off. Sure. Also, inquiries, right? I think inquiries stay on there for 2 years, and then they fall off.
Yeah.
And then how many? I know I'm asking these questions because some of the stuff I already know, but some of the stuff I want people to understand as well. Sure. When you're applying for something, right? Let's say you're looking for a new car.
Yep.
The average person, what we do, we'll go to the lot.
Right.
We'll let the lot run the credit and let them run all their banks.
Right.
Run through all the inquiries and all the hard inquiries. But how many inquiries are you allowed per month before it starts to damage your score?
Yeah. So that's a good question. As long as it's a car or a mortgage, if you do it within a 30-day window, it only counts as one hit. So it's okay if you're shopping for a car to go to different dealerships and have them pull your credit, because auto only counts as one if it's done within that 30-day window. Same thing with a mortgage. You're going to rate shop and do that. Anything else, though, credit cards, personal loans, anything else, anything that you apply for is going to negatively impact the score. Is going to cost you 2 points each. So just make sure that if you are shopping for a car or buying a house, make sure that you're ready to actually make the purchase, because if you're ready to do it, then do it within that 30-day period, so that way it doesn't hit you multiple times.
Should people, when I'm just speaking on we're speaking on auto loans and auto loans right now.
Yeah.
Should people, would you recommend them to go through their bank, through their own personal bank to get the loan versus going through a car lot?
Yeah, so I'm a big fan of credit unions, because credit unions don't have high, they have lower interest rates, and there's a lot of alternative lenders out there, meaning that there are a lot of lenders that don't have like a physical bank, like brick and mortar, and so because their expenses are lower, they're able to provide you with cheaper rates. And so I think absolutely. I think that it would be a good idea. You know your credit. You go to your credit union first, or go to like an online lender. See if you get a low rate, and then you walk into the lot with a pre-approval, from a bank. Because also that gives you more leverage too when it's time to buy, because now the salesperson can't like talk you into something or payments. You know what I'm saying? You already know I'm approved for $40,000 at 5%. This is what I got. What you got for me?
And then also what bank they're looking at, because most of the time when people go to these lots, they don't know what banks they're checking.
Yeah.
So we got a few questions. Somebody said, how do you check your credit every day? Which site do you use? Most people use Credit Karma. You can use Credit Karma, but Credit Karma is not 100% accurate.
Yeah, so Credit Karma is using your Vantage score. So understand that there are many scoring models out there. FICO is what 90% of lenders use. And so if you use your Credit Karma, it's going to give you a good indication of where your credit score is. But, you know, to your point, Taj, your fancy score is not going is not being used by lenders. And so your Credit Karma is not going to be accurate, right? So you can use Credit Karma as a gauge, but just, you know, when you go to apply for something, just know that FICO is what most lenders are looking at.
I want to come back to this, but we got some more questions real quick. And hold on just a second. If you do got a question, but Hashcast, man, I love this. I'm loving this conversation.
Yes,
I love talking about this. So make sure y'all hit the question icon at the bottom and type your question in, and we'll get to you. Let's see. Okay, I think you already spoke about this. Banking with credit union versus traditional banks.
Yeah. So credit union, you own it. Traditional bank, you don't, right? And so that's basically the premise of a credit union. A credit union is owned by its members, and so you have to have some type of affiliation in order to join the credit union. Whether you live in a neighborhood, whether you are part of the job union, whatever it is, you have to have some type of affiliation to be part of the credit union. But you actually own it, right? And that's important because credit unions work in the favor of its members. It doesn't have to appease investors or anything like that. And so they work for your benefit, opposed to a traditional bank that is owned by its investors, right? And a traditional bank is mainly owned by its investors. So when it makes decisions, it is looking to help out the investors. That's why they charge fees. That's why there's just so much, you know, it costs so much to bank sometimes with a traditional bank. So I would say just focus on, you know, taking a look at both, right? Taking a look at a credit union, taking a look at a traditional bank, taking a look at digital banks, right? That might not have those overheads, that might be able to, you know, charge you less. But just understand that the difference is the ownership structure.
What is the best way to gain good credit without getting a credit card? This is the question from one of the viewers.
So you need some type of revolving line of credit to have good credit. When you think about, so when I told you the 5 categories, right? 35, 30, 15, 10, 10, 30% of your score is based on your revolving line of credit, which means AKA credit card. If you don't have a credit card, that is equivalent to going to school, but the highest score you can get in that class is a 70, right? Because it's on, you know, your credit is only being activated 70%. And so for most people who may not want to use a credit card, I would say potentially take out a secured card where you're using your money, and that way you can activate that portion of it. But I would suggest that you have some type of revolving line of credit so that you activate that 30% of your score. Yeah,
because a secure card, you could put average bank, I'm not sure all banks do, but I know a bank like Fifth Third, right? You take the minimum $300, they'll put that, they got to run your credit for that, but they'll take $300, put it on the card, that's your money.
Yep.
Okay, you're essentially just using your money, spending it and paying yourself back. And it is a huge credit booster for your credit score.
Yeah, no, literally, like I've seen people go from, you know, low 500s to upper 7s because they activated a credit card or some type of revolving line of credit. So that's absolutely right. But always remember, again, make sure that whatever it is, whether it's a secure card or a regular credit card, that you're only using 30% or lower of that, right? Because if you go above 30%, you're negatively impacting your score, which means that in that same example, if you have a $300 secured credit card, make sure that you're only using $90 or below, right? Anything above $90 is above 30%, and that negatively impacts your score.
Any questions? We've been on here almost 30 minutes going in. We can stay here all day because I love these conversations. If you got a question, please hit the question icon at the bottom, so that way we can get your questions asked to Hashcast so I don't miss them in the comments. So moving along, let's go to home ownership, right? People who want to do, if you're a homeowner, you want to be a first-time homeowner, or you want to be a real estate investor. Let's talk about home ownership. People want to get their homes for the first time. What is the process in that? Because I know this is one of the things that one of my viewers really wanted to know about. So what is the process when you're becoming a first-time homeowner?
Yeah, I mean, so first-time home ownership, I think number one is making sure that your credit is intact, right? Making sure that you have, good credit, or at least good credit habits, right? Because there are programs out there that you don't necessarily have to have good credit. Like if you do an FHA loan, I believe FHA starts at 580s, right? So you don't have to have great credit. But I would suggest that anybody that does have 580, that you're learning how to build your credit, so that you understand how to manage that credit and not, and not have those same habits as you become a homeowner. But I think the first step is really, understanding your finances, understanding where you are with your credit, but understand, making sure that you have a budget, making sure that you could afford a home, and so look at, how much extra would it cost, right? Not just your not just your mortgage payment, but any maintenance that needs to be done, any fees, whatever it is. See if you can afford it. Once you understand that, the first step would be is to get somebody to approve you for the loan.
Hold on just a second.
Yes.
Just a second. Not to cut you off, but they're asking questions in the comments, and I don't want to miss these. You got to hit that question icon at the bottom of the screen and then type your question in there. He said it's Capital One a good beginner card? Yes, in my opinion. But go ahead and answer that question, please.
Yeah. I like Capital One as a beginner card because they offer secured cards and traditional cards. So that way, if you apply for a traditional card and they deny you, you could then apply for the secured card, and it won't be a double hit on your credit report. So yes, I like it as a beginner card because let's say, for instance, if you went to American Express as your first card and you apply and Amex declines you, that's one hard hit on your credit report. Now you have to go to another bank, and that's another hard hit, and that negatively impacts you. At least with Capital One, because they offer secured cards and unsecured cards, you could get one hit, and you'll be fine.
Another question, real quick. He says I have $100,000 in equity in my property. What is a good strategy to buy my second property?
If you have $100,000 in equity, I would say kind of look and see what are good rental areas. So places that may be close to where you live, but has a booming rental market, and then just start to look at different homes. I wouldn't take out the whole 100,000, but I would kind of look at potentially using some of that equity as a way to get a second property that's income producing, right? So I wouldn't just buy a property. I wouldn't buy a vacation home. I wouldn't buy a home just so you can have another home. I wouldn't buy a home to put your kids in or whatever. I would use it as an income producing. So let's say, for instance, you find a second property and you're able to buy that property at $30,000, let's say. Whether you finance it, what I'm saying, or you could pay for it cash. Depending on where you are, $30,000 might not get you a full, a full home that's livable. But let's say, for instance, you do wind up, getting an investment property. You use some of that money as a down payment, and then you do take out a mortgage. At least if it's a multifamily that has income, in it, you can now use that income to pay back the mortgage and pay back your home equity as you're stacking the rest.
That's right. Now let's go back to the conversation we were having about first time homeowners.
Yeah.
And what the steps on the process should be for them and getting a home.
Yeah. So once you get to the point where you know your budget, your credit, you go to a lender and you get the lender to approve you for a loan. That is the best way to go because the lender is going to look at all of your information, is going to look at, how much you can afford, and they'll give you a number. And if based on that number, that now you can plug that number into your budget to see if that works with your current income. You go to, once you do that, you find a real estate agent. The agent is going to now find homes within that parameter, right? It does not make sense for you to start looking for homes before you know how much you can afford. Right, or how much you can get approved for, because now you're just wasting your time. And so once you know how much you can afford, how much you're approved for, then you start to go look for homes based on that. And then once you get through that process, there's there's inspections, there's appraisals, there's a whole process between the time you give the offer to closing. But for a first-time home buyer, that's the basic, basic things you need to know.
All right, so I want to take some more questions. Then we want to get into your books. And want to make sure we acknowledge, your work. So
sure.
As we're giving away this information. So let's get to these questions real quick. Does buying a home cause your score to go down? VA loan.
It depends, right? So most new credit is gonna take a temporary dip in your score, and so whether it's a home, whether it's a car, whether it's a credit card, a lot of times when you are first applying for something or you first get a new account, it may dip your score temporarily. But then as the months go past, as you're paying it back, you'll see your score increase. So you might see a temporary dip, but in 30 to 60 days it'll jump back up there.
Another question. Is investment property trying to look for a second? That's not I think you answered his question, but he put it in the all right, let's go to the other one. Hold on just a second. Okay, I was told that your balance should be 5%, not 30% each month, which is true and why?
Yeah. So like I said to you, what I said earlier, 30% is what is the norm, right? So it's 30% or lower, but that it depends on what score you want. And so your FICO score goes 300 to 850. Those who have a 720 or above, mean excellent credit, use less than 10%. They use between 10 and 15%, and so 5% is even better if you're looking for a higher score. If you go to 30, you're not going to be negatively impacted, but if you want to get excellent credit, if you want to be in the 700 clubs and you want to kind of go to the 800s, then if you stayed at 5%, then that would positively impact that score.
And I want to let people know. I want to suggest to people, make sure that you're researching this stuff every day. Like I take time out of every day to research credit, what's going on, because the credit world changes. It's going to change again next year. Sure. So with the loopholes and the rules and the laws and the regulations that are changing all the time, you got to stay up on it. Don't expect anybody to let you, give you that information. You got to go out there and make sure that you're researching it for yourself. So that way you stay one step ahead of everything. So sure. That way you're not falling behind on, I didn't know that. And, it's not, because everything constantly changes. Right. So let's get into Hustlenomics.
Yes.
The book inspired by Nipsey Hussle. Yeah, you got it.
You know what I'm saying? I got to yeah.
So let's talk about Hustlenomics. Tell us about the book and how you got inspired to come up with Hustlenomics.
Yeah, so, if anybody follows my work, I am someone who uses culturally relevant topics in order to teach financial literacy. And so my first sort of like venture into that was in 2018 when Jay-Z wrote when he came out with the 444 album. Mm-hmm. And so listening to 444, Jay was talking about credit, generational wealth, cooperative economics. There was so much jewels that he was giving in the album that I felt like, man, I don't want this to go over someone's head. And so as a financial educator, I decided, I think you can see it up there. That's the
which one is the one on the floor? Yeah.
Yeah.
Go ahead and grab it real quick.
What's up?
You got it right there. You can grab it real quick so people can see.
Yeah. So that's the, you know what I'm saying? I got a nice little stand with the 444, the Rock Nation hat. But yeah, so that's the wake up call. Financial lessons learned from 444. And so, I decided to write that book based on that. And I realized it was people appreciated that book because you put the medicine in the candy, right? Mm-hmm. And so when I listened to, and I also have another book that I wrote based on Kanye called Making Sense of Kanye, which is similar thought process as Kanye was ranting and doing his thing. And he was talking about how he's bipolar. I thought that there wasn't enough conversation about mental health and money.
Right.
And so that's what this book covers. It covers mental health and money, and it's a guide to financial freedom, a spiritual guide to financial freedom, peace, love, and happiness. When I learned, or when I heard about when I heard Victory Lap, it automatically kind of blew me away. I was like, wow, like Nipsey is on another level. You know, he's teaching, you know, the masses about, or the inner city specifically, about how to own your now and your future. And in fact, I actually started writing Hustlenomics when Nipsey was still alive. And so I started writing this book, you know, to focus on the Victory Lap. And then, you know, in fact, I have a friend of mine who, you know, was on Nipsey's project at Atlantic Record that I had reached out to on trying to, like, you know, connect with Nip and, you know, see if we could do it together. Unfortunately, you know, with his you know, untimely passing or being murdered, let's just be honest, I said to myself that I had to finish this book because what Nipsey was teaching us was so important. What he was doing was so important that his legacy or his teachings could not die with him in the physical. And so I decided to finish the book. And, you know, for me, my intentions are pure, but I didn't want anybody to kind of feel like, yo, I'm trying to capitalize off of, you know, his death. And so instead of charging for the book, I actually just gave it away for free, right? And so if you go to hustlenomics.com, you can download the book for free. Within the first week of putting it out, I think I got about 10,000 downloads of the book. And so, you know, and you know, fast out to Hip Hop DX, fast out to you know, all the websites that, you know, Hot 97, all the websites that were just showing love, you know, on the book. And so, you know, if anybody who has read the book will understand that this is not just like, I didn't just put something together. Like I didn't just like, oh, let me swap something together just to capitalize off the moment. Like, this is actually like, there's a lot of research that was done, you know, done for the book. There's a lot of history in the book. There's actionable items, like chapter 4 is called the Victory Lap Action Plan. Like I charge minimum $1,500 a month to sit with somebody to help them with their business plan as a business consultant. I put it in a book for free, right? Like the stuff that I would go through with a business to help them with their business plan and their marketing plan is in there for free. Like, it's actually in the book. Chapter 4, the whole chapter is on there. And so, yeah, that was my goal. My goal was just to create, you know, keep the conversation going, because he, you know, Nip was so important to the culture.
Is the book still available?
It's still available, right? Yeah. So if you go to hustlenomics.com, you could download the book for free. It's available. I do have paperback copies available on Amazon.com, so you can purchase a physical copy as well. You know, part of what my intentions are, you know, I've been reaching out to the family. My intentions is to keep it alive, and so I've been sending books to the schools. Like, from the proceeds, I've been sending like physical books to the schools, and then I'm also trying to connect to see what cause or something that I could donate money to as well. But the free digital copy is always going to be available at hustlenomics.com.
That's what's up. We got a question. What are your thoughts on short-term rentals as a first rental investment property, like an Airbnb?
Yeah, I love it. I think it's good, especially now because the short-term market is booming, and then you can actually make a lot more money doing short-term rentals, less headache than long-term. Like, it's more money, less headache, right? And I'm talking from experience. You get a tenant for long-term. You know, if they lose their job, if something happens, you know what I'm saying? You got to go through that whole hassle of trying to, you know, get late payments, kick them out, whatever the case may be.
Yeah.
If you do short term, you can charge more, but then also, you know, right? Like, every time they leave, you know what I mean? There's a new person coming in.
Mm-hmm.
Airbnb, you know, they have a process, right? So now you get to vet the people that you accept, right? Because if they don't have a good rating, you don't have to take them. You know, there's cleaning fees, so you know that's in their fee. There's you know, you can hire somebody to clean for you, and so I like short term better because you know as you are making money from short term, you could then use that money to now invest in like long term if you want to do that.
All right, man. You know what? We've had you, I'm pretty sure, way past the time that you had available. But this is one of the conversations that I think can go on for hours, man. They can go on for days.
For sure.
Only because I think now we're in a climate where people really want their lives changed.
Yeah.
People really trying to figure out, do I really want to be an investor? Do I want to work a job for the rest of my life? And if I don't, what's the ways I can work my money? How can I leverage this credit personally and in business? How can the two intertwine with each other? Mm-hmm. You know what I mean? So I think people are really, really eager to get this going. And you know, we got you on here just to, you know, get the questions answered, have a conversation, and keep the dialogue going. With you being a financial educator, in your opinion, what is the keys to success and what the steps people need to take to get to their financial goals?
I think it's multiple streams of income. I think it's multiple. You know, like as the Honorable Sean Carter said, merrily eat off of streams. When I think about, I mean, number one is mindset, right? And so we covered that. But most people, once you have your mind right, most people, you know, are not free because they don't have multiple streams of income. And so multiple streams of income gives you freedom. It gives you options, you know, it gives you peace of mind. And so I think the key is multiple streams. I think that, you know, if you have a clear path of where you want to be with your finances, what you want to do financially, and then you focus on, you know, Nipsey's talked about this, right? He talked about the ecosystem, right? When he talks about, you know, vertical integration, that's like, all right, let me figure out what do I do? How do I, you know, vertically integrate and own the ecosystem within what I do? So I'll give you a prime example. I'm a financial educator and I write books, right? Mm-hmm. And so, you know, that's one way that I get paid through writing books. But also, you know, because I'm a public speaker, I have a lot of energy. And so people pay me to come out and touch their stage and speak to a group of people. So that's another way I get paid, right? And then when you think about, like, you know, I have a subscription-based model, right? Where, you know, I have products and services, right? Like you could be part of my, you know, my Mind Right Legacy program where, you know, I create a program where you can, you know, I charge a monthly fee to group coach, right? So if people want, you know, access to group coaching, like they could, you know, be part of the Mind Right Legacy program. You know, I also do business consulting and private consulting. And so that's all different streams of income within the same thing, though. It's one thing. And in that way, I'm touching all people, though, right? If somebody's like, Ash, you bugging, bro. I don't got $1,500 to pay you a month. Okay, great. Then join my monthly program that's only $26 a month. You know what? I don't know if I can afford $26 a month. Okay, bet. Buy a book for $10 one time. You know what I'm saying? Like, you meet people at different places. Like, yo, Ash, I want you to come to speak, but it might cost $10 grand to have me come touch a stage. All right, bet. So maybe you join my academy and watch a speech, you know what I'm saying? Or you do a group coaching. So what I'm saying is it's the same thing within, you know, it's the same thing within what I'm doing, but there's different, you know, I own the whole ecosystem, you know, for it. And so I would say that. I would say anybody who is looking to be free, I'm not telling you to be the jack of all trades with different things. I'm saying whatever you're good at, right? Whatever you're good at, there are multiple streams of income within that thing. And then maximize that. And then once you maximize that, then you can start investing in other things. Like I invest in real estate and there's other businesses, things of that nature. I could do that once I diversify my income.
I know we covered a lot. All right.
Sure. Yeah.
Appreciate it. Now, is there anything else you would like to tell the people?
Man, I would just say this, right? If you look at history, and I talk about this in a book, if you look at history, there hasn't been any other time in America that we were as free as we are right now, right? No other time. This is the only time, right? These last 50 years has been the freest we have been, and we have the most access to wealth right now. There's going to be a great transfer of wealth coming up soon, where a lot of baby boomers are either retiring or dying, and passing off that money to the younger generation, which is are the millennials, right? Generation X and the millennials. It will behoove you to learn a skill, learn something that you're good at, and learn how to be part of that wealth transfer, right? I think it's like $52 trillion, if I'm not mistaken. Like, it's a lot of money that's being transferred. Be in the game, right? Don't be a spectator. Be in the game. And so learn about financial education as much as possible, because it's not about money, right? It's not about money. Like, you could have all the money in the world, right? The average lottery winner loses their money in 5 years or less. So it's not money. Stop thinking that money is going to change your situation. It's not that. It is your financial habits. So whether you have $1, $10,000, $100,000, $1 million, make sure that you have the right financial habits right now and be part of that change. Start a business, own some intellectual property, supports other people's businesses, invest in real estate, invest in the stock market. Just make sure that you are part of this wealth transfer, because the goal, right? Life is for living. The reason why we're here on this earth is to live our best life. And you cannot do that if you're not financially free. You could have some, and I'm not saying money brings happiness,
right?
But I've been rich and I've been poor, and trust me, I'm happier when I got money. I'm just gonna tell you that.
I'd rather deal with my problems with $1 million than deal with $10.
Exactly. So I just leave it there, right? And so I would say, just make sure that you're putting yourself in position to be free, to enjoy life, to do what you want to do, because life is abundant. You can have anything that you want if you put your mind to it. And so just think about the abundance that you want, and be in the game. Don't be a spectator.
Man, I want to thank everybody, including Hash Cash, for coming on. Oh man, I mean, can't thank you enough, man, for all the information that you gave. Thanks to everybody who engaged and asked questions, got the information that you needed. You can also, this will be up for 24 hours. Then you can go to TajLongino.com and watch it again. So this is not going to be the only time that you can watch this live. You'll be able to watch it over and over and over again. It'll be on the YouTube. It'll be on TajLongino.com. Make sure you follow Ash Cash at
I am Ash Cash.
Yeah.
I
should know that. I've been tagging it for a week straight. I should know that by heart.
For sure.
Well, thanks everybody. Appreciate you, Hash Cash. Man, y'all have a great weekend. Remember, each one, reach one, teach one. We out.
Appreciate you, brother. Salute.
Thank you. Salute.
All right, peace.
Please.